In this video, we're talking about a stock for which I'm down some 40 points. I started a wheel on Zillow and it hasn't gone well. Today we're going to talk about how I plan to deal with this disaster. And I have a feeling many of you might be in the same trade. Down considerably. We started a wheel. We thought we would get the shares where the stock is currently trading. Stock has since fallen tremendously, and now we have to deal because we were assigned the shares. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red-hot covered call car session video. I'm on the road. I want to talk covered calls. Now, hey, look, I am on the road. These are my unedited car session videos. I do them all the time. I'll tell you what, it is always fun just sharing with you my stories, my experience, so maybe you learn something. That's why we come back every single week. I show you timely and relevant covered call and cash secure put trades, just trying to up your game. That's why if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, hey, look, what we're doing today, we're going to talk about a situation that I know many of you are in, just like me, right now. We started the wheel trade that is so popular on YouTube. Everybody's talking about the wheel. So everybody loves the wheel. I know I get tons of emails asking about very specific wheel trades. So I know a lot of people are doing it. Now, the wheel trade, very basic. Instead of buying 100 shares so we can write a covered call, what we're going to do is this. We're going to sell a cash secure put. Probably for a week or less. Probably in the money or at the money. So we're assigned the shares so we can collect premium on the very first trade of the wheel. Then what we're going to do is immediately get assigned the shares. We're then going to write a covered call, 30-day covered call, starting the wheel of profit. And hopefully our shares are taken away and we do it again. That is the popular wheel strategy. And I'm telling you now, many people are like me right now with Zillow. Zillow was an idea of mine earlier this year. I told you in my video, these stocks that I were going to buy for $120,000, Zillow was one of them. Told you it was going to double, and in fact it did. Went from $103 all the way to $210. Man, life is rocking for me. Had 100 shares. Wanted to write a covered call. Stock just got away from me. And to be honest with you, I went from wanting to own just 100 shares. I wanted 300 shares. I wanted to play big baller with Zillow because I believe Zillow is in that sweet spot of the online mortgage property business. You know, I told you Zillow is a verb stock. People want to buy a house. They want to rent. As they're driving in the neighborhoods, what do? They say, hey, look, check that house out. Let's Zillow it. So I believe Zillow doubles, and I still believe it does, but until we get there, it has retraced all the way down to where I think it's trading at $1.24 this morning. Problem is, when it hit 210, I got a little out of my lane, and I'm going to explain that here in a minute. Usually, I never, ever get involved with a stock that is trading above the Keltner Channel mid, but more importantly, near the Keltner Channel top. Because usually, without even looking at the RSI, which the RSI is a great indicator for whether a stock is overbought or oversold, Zillow was trading at the top of the range. And I knew I was getting involved in Zillow a little hot. And sure enough, I did 2 cash secure puts. I did a 195, and as it fell, which I kind of knew it was going to, I thought I found a nice support line at 172.50. Well, the NASDAQ decides to sell off tremendously. Wall Street taking profits. The opening trade is not happening anymore. So they're taking all the fluff out of these high flyer stocks, and Zillow being one of them. So I'm stuck now with a 172.50 cash secure put, and I got to sign the shares. Now, that was supposed to be a wheel trade. For the record, I wanted to own 300 shares. So I don't necessarily know if this was a wheel trade in the sense that I was just going to look to turn profit. But at the end of the day, that's where we're at, and that's where a lot of you are at. So, what happens on Friday? Well, I had many decisions to make. You know that the stock is trading tremendously below 172.50. In fact, my $12.50 premium I got paid last week, early last week, it was trading for $50. Now, I sent an email to my members. I absolutely love asking the community of like-minded people what they would do. I presented 3 things to them. I got so many responses, I couldn't even reply to them all. But it made me think. And that's what my membership's all about. Making you think, showing you the world through John's eyes. What does John think? Right? All the trades that I show, the real-time trades I show, you get to see it, you get to read the commentary. Okay? And, of course, you have access to me. You got a question, you can email me. I get back to you within 24 hours. Where are you getting that kind of access? You ain't getting it with these other gurus, $50 a month services. I got a very inexpensive membership, and my 100% goal is to up your game. I got a 1 free month offer over there on my website, cptdashboard.com. Now, with that said, the member said, look, option number 3 is probably your best. Option number 3 being roll out, roll down, try to pick up some credits. Here's the problem, and I'm going to mention option 1 and 2. Obviously, you know I can just be flat out a sign, and we're already in the hole. And I did the math on that, and by the way, I've told you many times, that's how you really determine if you want to be assigned the shares. You do the math based on where you're at. If you bought back the option, that's a flat out premium loss. No winner there. Versus being assigned the shares. You know, you're giving the shares much lower. You were given some premium. Deduct that. And where are you at? Now, we hate using our premium for, cost basis reduction. At least I do. I'm spending that money in retirement, right? Paying the bills. But in this case, had I applied that $12.50 premium to the stock price, it'd have been about $160. And it is $160, by the way. That's my cost basis now. Stock's trading for $124X. I'm in the hole tremendously. So, with that said, option number 3 is to roll out, roll down, try to pick up another credit. When I did that, and I did the math on that, when I did that, the credit that I would have picked up, I'm still in the hole. It is a hole for which I got to dig out. This is why I call all my trades crumbs. My expectations are low. I want to pick up a crumb here, a crumb there. It's a mindset. Because if I find myself in this very situation, we have to claw our way back using the various different trades. We have an opportunity to claw back, and I do. I'm down considerably. And now I have to make a decision what I want to do before Friday's expiration. Now, I could, again, roll out, meaning I buy back that option, $50. I'm immediately down. I then sell the at-the-money cash secure put, probably for 30 days. Maybe, hell, try to get more premium, go 3 months. This is not going to be a 30-day trade, okay? And, of course, then I'm not getting some $38 in premium. This is a losing trade, okay? I'm going to have to work this trade to make it profitable. Or I could be assigned the shares. Now, I'm assigned the shares. I'm tremendously down, but I own the shares. Now, if I believe in Zillow, which I do, then it's just a matter of me now deciding what I'm going to do with these shares that I'm in the hole. And like I said, crumbs. So this is what we're going to do. And this is what I advise any of you to consider. Okay? One, I want you to consider that 1 free month of my premium membership so you can email me these questions, because I know a lot of people are down on big stocks, man. Woo! Woo! You want that second opinion. What does John think? I'm always there for you. Look, we have to battle our way back. So I'm going to sign the shares now. 160 cost basis. Here's what I'm going to do. I can do two things now, and we're not selling. That would be number 3. No. Number 1, we could dance with the devil. What I mean by that is my cost basis is 160. If I write or sell covered calls for which the strike price is below my cost basis of 160, the closer I get to the stock current price, the more premium I'm going to get, right? But the likelihood that Zillow could pop higher than my strike price could put me in a very bad spot. And with Zillow, this could happen. Zillow will move 15 points in a day. Okay? So if I'm going to dance, I need to be prepared. And again, dancing with the devil means my cost basis 160, stock's trading at 124x. If I sell the 130 or 140 30-day covered call, this thing in 30 days could pop above my strike, having my shares taken away below my cost basis of 160, losing money, wasting time. So I have to be prepared to buy that back, not letting it go to expiration, particularly if it jumps above my strike. At any point, they could pull the trigger if it makes sense, meaning take the current stock price above the strike plus the premium they paid. Now it makes it profitable for them to take your shares if they want your shares. A lot of people don't, they'll just sell the option. But my point is this, you're dancing. That's what I call dance with the devil. You have to be prepared to take action or else your shares will be taken away. You lose. Or I could do this. Now, it is dancing. It is dancing, but less risky. And this is what I'm going to do. We're going to do the 30 delta or less. This is where the crumbs come in. Look, I am not going to get out of this in the next 30 days. Just not. The reality is, unless I am in between trades and the stock pops, luckily, I'm going to have to write little 30-day deep out of the money cover calls, collect what I can collect, add them to my spreadsheet, slowly but surely reducing that cost basis. I'm going to do those 30 delta strikes, right? Google what is options delta. And hey, look, you don't make much. You don't make much. This is a long trade now. Damn, man, I'm like Chuck Hughes. I need a drink of water. You ever watch a Chuck Hughes video? He gets halfway in, man, and I'm like, somebody give Chuck a bottle of water. So, with that said, the 30 delta, 30% chance the stock in that time frame gets to my strike price. There's still a positive 30% it can. And in the case of Zillow, if this thing turns around, bang, it's going to. I got to be prepared. I'm still dancing. Chances are, think of this for a second. Chances are it's going to rally up to my strike price because it's going to be deep out of the money strike. And by the time expiration happens, there might be that pullback. Stocks go up and down, man. They pull back. This is why I should not have done any of this until Zillow fell from the Keltner channel top to the Keltner channel mid. At least the Keltner channel mid. I did that with Penn just recently. Let it get down a little bit below the Keltner channel mid. And look what it's doing. It has fallen from 125 down to 105, 100. But it's found support. It is not tanking like Zillow. Additional 40 points. That's what I love to do, man. Use that Keltner channel mid. Keltner channel is a stocks trading range. if it's trading at the mid or below, I could pretty much bet the RSI is still bullish at 40, 50, but it's not red hot overbought indicator in the 70s and 80s. So that's where I'm at. And if you are in this situation and you're going to hold the stock, you can also sit on your hands and just wait for it to come back. You can. I would advise you write those deep out of the monies, pick up a little crumbs, make it just get your experience. Use these opportunities now to write the call. You're not making much. Put it on your spreadsheet, right? Put it on the total, your cost basis calculator. You can get that at my website, cptdashboard.com. I offer all that stuff up for free. Keep track of it. Stay engaged. Do not let the wheels come off the wagon emotionally. I'm not emotionally bent here, man. I've been here many times with good old Alibaba. If you remember, I was in at Alibaba at like 195. It got down to 148. Whew, I got assigned early. That's where I learned that if you're going to go to expiration hoping that it gets back to your strike, which was a hope and a prayer, it was never going to get there. Boom, 2 weeks early, sign me the shares. They can do whatever they want. When we sell premium, you give them the right, but not the obligation to do whatever they want. Sign the shares, take your shares, so you just got to be prepared. But now I'm just going to say to you, use this as an opportunity. Write those deep out of the money. Use that 30 delta, right? Look at the charts. See where resistance is at on that chart, and maybe sell the above resistance trade. And of course, I could double down, buy some shares right here. I might do that too. Remember, I wanted to own 300 shares of Zillow. I don't own anything anymore. I own 100 shares. I'm down $40. So I have a little bit of dry powder to work with here, but that's my situation. That may not be yours. Always have a plan, execute the plan. Okay? I'm going to leave it right there. 1 free month offer. Okay? Go take advantage of it. If you're in these wheel trades and you don't know why you're down, you're feeling the emotional pressure, losing money, getting kicked in the ribs, email me. Okay? At the end of the day, you can learn this. I am 100% sure you can learn this, you can get through it, but you have to make good decisions. Get our financial education, open up that small ball account, do your very first safe trade. You got to get experience. If this was my very first trade, I'll tell you what, I might be in the fetal position, scared, never wanting to do it again. Can't do that. Look, the bills never stop in retirement. If I'm doing this, if I'm learning selling premium to put money on the table in retirement, those bills never end, right? It's just like getting kicked off a horse, or maybe you're a quarterback, you get hit really hard. You got to get up. This is how we pay bills in retirement. We live the good life. So with that said, I do wish you the best in trading. Hey, look, my next video is going to be my 3 best covered call stocks. I absolutely have 3 of my favorites. I promise you this video. I've been doing so much stuff, and I wanted to show you my March numbers. $17,000 for March. It's unbelievable how I've learned this strategy. I feel like I have done nothing different than what I did for the past 4.5 years. This year, remember, my goal is 60,000. Right now, if you go to my website, CPT Dashboard, you'll see exactly where I'm at. I hate to use the word or words on pace, because anything can happen, right? Get hit by a bus today, anything can happen. We are not guaranteed tomorrow, but we have to plan for it. But right now, I'm on pace. Well, $210,000. Unbelievable. Hey, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.